Hi, welcome back. It's been a busy few months for the NBFC sector, and finally it looks to be picking up the pieces and re-emerging from the liquidity squeeze. For vehicle financiers in particular, we are seeing a slowdown in the commercial vehicle cycle while tractor sales are picking up. Umesh Revankar, the MD of Shriram Transport Finance, joins in now, and in a bit we'll get more guests in. Mr. Revankar, good morning. Before I ask you about your own company, I wanted your thoughts on what loan waivers generally do to farmers in the rural community, and how does it impact financing of a lot of the products that you do, so be it commercial vehicles or tractors?
See, by and large, farm loan waiver happens to the crop loans. So, crop loan is basically based on the success of the crop, and the financing done by NBFC is basically on the equipment like a tractor or maybe harvester, that kind of asset. So these are not linked. So if there is a crop failure, because there's every chance that out of 3 crops in a year, 1 will fail. Sometimes it could be 2. So the losses to the farmer because of the failure, it could be because of drought or something else. So that is a little where the government gives or offers a waiver on loan. And normally the government pays to the bank directly. Actually, I don't think even bank will take the hit. But the headlines makes it read as if that the banks are taking the hit. It is not correct. So neither bank nor NBFC will have any impact. It is the government is taking the hit and paying on behalf of the farmer. So as far as the equipment lending is concerned, tractor or harvester, the farmers are very clear that it is not linked to the crop loan and they pay. So there could be here and there some local leaders trying to take advantage of it, but it is not a general phenomena. We have not faced any challenges in lending to the equipment.
Okay. No, Mr. Umesh, good morning. No, we have not at all given the impression that banks will take the hit. We were very clear. We had, in fact, Rajneesh Kumar with us on the day the loan waivers were announced, and he was very clear that, yeah, in the near term, the governments do pay us the money. He was only worrying about the longer-term credit culture and the moral hazard that creeps in, and that was exactly what I wanted to ask you. This tendency that, oh, it has been cancelled. Clearly, the governments in all the states have only said it will be, actually in Madhya Pradesh, they said nationalized banks. It's not even private sector banks. They only cancelled the loans of nationalized banks. So there is a lot in the fine print which the farmers don't know, and therefore they don't pay up. That's why this doubt that do you see an inching up of NPAs at a time like this because borrowers are not aware of what the fine print is?
No, I think, see, this has been making a headline for a very long time, the farm loan waiver. More than 12, 15 years I have been hearing this, or I have been seeing this, but it has not impacted our repayment, our collection. And we have been aggressive in lending a tractor and the equipment like harvesters. And farmers are making a very clear distinction between these two loans. So crop failure because of uncertainty in the nature is different from the tractor or harvester, which is used for commercial purpose. In the sense, the commercial means the farmer normally rent it, not only use it for their own farm, they also rent and make money. There's a commercial earning out of the equipment what they purchase. So they are behave like more like an operator there. So I don't really see that creating any negative culture or bad culture.
Okay. So the other thing we wanted to talk to you about was growth, because I was just reading a brokerage report where they said that the CV cycle over the next few quarters may take a hit because of higher fuel costs and tighter liquidity, etc. And growth for CV financiers may slow down just in the very near term. What's your own view on that? And if growth does slow down, what could the growth rates be, you think?
See, the growth rate definitely has slowed down, and the indication of that is available because normally pre-Diwali or during Diwali, the sales are reasonably higher This time we have not seen that kind of a demand for the buy of new vehicles. So maybe it got deferred, and post Diwali normally next 15-20 days it is a slow economy goes slow, because many of them are going on leave, or many of the producers do not move to the market, and December is the time that producers move to the market, and we have seen some growth in December. But November, yes, was little dull, and maybe the sales was lower from the rural side especially, and even in the urban we saw lesser infrastructure activity than normal, because infrastructure activity normally give boost to cement and steel movement, and being the bulk goods, they really take a lot of they really create a lot of activities in the movement. So we did not see these bulk goods moving as freely, and maybe real estate was little down, and even infra the activities are little down in the month of October, November. And December it is likely to improve, maybe because of election in 5 states. So there could be some reason for that. December we are witnessing a good movement, and the sales are slowly picking up in December. The manufacturers have not, they have cut the production, anticipating slower growth. So I think there is not much pressure. Otherwise, if they had manufactured more than what they could sell, there would have been huge inventory, and there would have been huge discounts to sell the inventory. I am not seeing that, witnessing that kind of a pressure from the manufacturer. That means they have a right inventory, maybe right quantum of inventory at this juncture, and the discounts are normal. So I believe December should be a reasonably good month compared to the October and November. And the growth rate for NBFC this quarter will be a little lower than the previous quarter, but definitely it will improve in the last quarter. I think the fourth quarter will be a busy quarter.
Okay. Mr. Revankar, I have 2 separate questions for you. One, while one of those brokerages was speaking about slowing, Credit Suisse has a very positive outlook on demand. In fact, their thought is that tractor population could actually double to 12 to 14 million before the saturation starts. The inevitable 3-year cycle. Would that be an optimistic way? Do you think that you would actually see demand? I mean, again, they don't mention it, but farm loan waiver normally helps the richer farmers because they take bank credit. The smaller farmers normally take non-institutional credit. So they perhaps will be in a better position. Are you positive about tractor demand at all?
Tractor demand has been consistently good. In fact, we were not really, I was not expecting a very fast recovery in the tractor growth in the previous year. And 2 consecutive good months, and this year also being reasonably good. The rural wealth is really increasing. So the purchasing power is increasing. That is for true. So more mechanization is happening, and more the mechanization of the farm, I think definitely the demand will go up. Because everybody would like to, because labor shortage is definitely there in the rural area. So labor shortage will create more tractor demand. Earlier, the entire northern belt, especially in UP, Bihar, people used to migrate for various states for the agri labor. Today, they are not migrating anymore. So that means there is enough work in their local farm, and they are buying the equipment. So that creates a demand. So if UP, Bihar, MP, which are the largest farm producers, and if the people buy a tractor there, and if they start utilizing, I think definitely demand has to go up.
Okay, Mr. Revankar, the other thing I wanted to ask you is, how is the fundraising market? Is the near-term tension over, but is the 1-year to 3-year market still very jittery? That's what people say.
I don't really see it jittery, but I feel things are easing out over the period. And we are able to raise 1:3 years. So I think it is easing. So it's the only thing is what had tightened had eased, and over the period it is going to be much more better and more liquid. That's what I believe.
Okay. So what would your average funding cost and margins be this year vis-a-vis last year?
Vis-a-vis last year, it will be around 60 basis point more, like to like basis, and
margins,
because the retail component will have a higher cost because of distribution cost included. And definitely, if you take that 60 basis point is the clear, clear increase over the last year.
Okay. In terms of new commercial vehicle AUMs, what kind of growth are you looking at? AUM growth, that is, for FY20, and by the end of FY19, where will it be? I mean, in the last quarter, the new CV AUM growth was pretty good at 46%. But what do you think a reasonable run rate could be?
So this quarter, it is definitely slowed down, and next quarter we are expecting it to increase. So it should be maybe around 25 to 30 basis for the year-on-year basis on a new vehicle.
All right, we'll leave it at that. Thank you so much for joining us and giving us your views. Well, that's the word coming in from Shriram Transport. Demand has definitely slowed down in key pockets like commercial vehicles, etc. And the growth may not be as good as it was in the past many quarters. But let's move on. HP Singh, the founder and MD of Saturn Credit Care, also joins us now to talk about the same space and whether there is still a liquidity crisis or not. Mr. Singh, good morning. You tell us, how is the situation now compared to what it was when there was the peak of the credit crisis?
We have had no crisis as such, technically. I think, the overall, if the NBFC sector did, I think it was limited to a few companies as such, maybe the housing finance company. So, but we've had no liquidity crisis as such. And in fact, post whatever the crisis was after the peak, as from where we come from, in fact, we're getting a lot of sanctions, we're getting a lot of disbursements. So it's not been there. It's not been there.
Okay. You've got, good morning, Mr. Singh. You got sanctions from, sanctions were there, but sometimes banks were not disbursing. Have you got loans disbursed from banks? And have you been able to raise from the wholesale market?
So we've got disbursement from banks also, not the pure term loans as what we had earlier. So we've had, the assignments and securitization from State Bank of India as what they had promised in their thing that they're doing over 45,000 crore worth of securitization.
So you sold to them?
That, from them? Yes, we did. We did. Okay. How? And that was in September, October.
Okay.
That was about 200 crores.
Okay. And you have got some fresh fundraising from Netherlands, from Netherlands Development Finance Company.
Yeah, so FMO has taken a 30 billion credit line for us about 2 weeks back. And that is probably one of the reaffirmation again for the microfinance sector, if you really look at it. It's a reaffirmation of the faith still in microfinance over here in India. And overall, maybe the NBFC sector space also.
Okay. Is there any impact of the farm loan waiver on either your portfolio? Also, what are your views on how it could impact customer credit culture?
Well, I think, initially it does, when this is announced, it does take, somewhere of our bandwidth to make the borrowers understand that this is typically not related to us. This is more of the nationalized bank loans as well as crop loans, so it's not related to the microfinance loans. So we do have to, enhance our bandwidth to sensitize the borrowers in terms of, what these crop loan waivers are, and it's not related to us. So beyond that, I think, then it gets, clear to them that, yes, this is not related to a microfinance loan, which is not typically a crop loan. But yes, I think, initial thrust has to be done. The field really gets sensitized. Our boys have to really go out and, talk to the borrowers, make them understand, what these loan waivers are. Does have some impact in the initial thing, but I think overall gets once they understand, I think it gets over by then.
Okay, your overall AUM, assets under management, as of end of second quarter stood at about 5,800 crore. How much do you think you will be able to grow it in the next 12 months? That is, say, Q2 of next year?
Q2 of next year?
No, by Q2. I mean, September to September, how much might it be?
So I'll give you the near term this thing.
Sure.
So we're looking at the next quarter as such. We're having a very controlled growth. Typically whenever these kind of headwinds arise, I think it's always fair and prudent to probably have controlled growth as such. So what we are looking at is we did give a guidance of about 40% year on year, but our own sense is that we'll be close to about 30% to about 32% in terms of our AUM growth for March 19. But if I look at the long-term horizon in terms of this thing, I think we have elections coming up in May 19. And if you really look at all these farm loan waivers and all this thing, look up it up. And probably the last time also I had said that in the long run, these farm loan waivers are technically good for scalability of our growth in our sector as such, because people do have in surplus cash with them and they would look like towards enhancing their business, as such. So our own sense is, I think, somewhere around a 30% growth, for 1 year from now on is probably what we are looking at.
But what is the NPA you are expecting? I mean, you've already seen almost 90 days of this quarter. Have you seen any disturbance? Will you be reporting slightly higher asset quality problems?
No, asset quality remains very stable this quarter also as compared to our last quarter. We didn't have any kind of a deterioration, even in spite of the fact that, yes, I told you the headwinds of these crop loan waivers and everything is there, but it's been fairly stable. It's absolutely stable, no deterioration what we see.
Okay, that's very good to hear. What about the incremental cost of funds? I mean, what does it stand at now versus what the average cost of funds was about a couple of quarters back?
So our average cost of funds a couple of quarters back was about 11%. This has increased to close to about 12% now. So there's been a 1% increase and a 100 basis points increase in terms of our cost of borrowing. We have a lag of 1 quarter where we are able to pass it on to our borrowers. So, our margin remains intact. In fact, it doesn't disturb our margin only for a very short period of time. But this probably will be passed on to our borrowers. But it's been a 1% rise in our cost of borrowings.
All right. We'll leave it at that. Mr. Singh, thank you very much indeed for joining us with your thoughts. So that's Satin Credit Care saying that, okay, if they had ambitions of 40%, they're scaling it down to about 32% in terms of assets under management. In the longer run, the farm loan waiver disturbance usually irons out and they are not expecting much by way of asset quality problems. Margins remaining the same as it was last year. Well, with that, let's shift back our focus to the markets. We had seen a bit of pullback and some green on the screen, but the green has brought the sellers again. And now we are seeing a 0.25% hit to the Nifty, about 24 points down. But it is the mid-caps that are seeing a lot more profit taking. That index is down 100 points or 0.5%. Advanced declines are looking more like 1.3 stocks in the green, in the red, for 1 in the green. So not a very pretty picture.
Also, the biggest Nifty loser today is Hero MotoCorp. That's because Goldman Sachs has downgraded Hero to a sell from a neutral call. They've cut the target price as well to 2773 versus 3175 earlier. And they say that Honda's market share ambitions are now having a direct impact on Hero. That's the feeling they got when they met Honda's management last week. But let's get our guests in. Ashwini Gujral, Mitesh Thakkar and Prakash Gaba join in. Gentlemen, morning. Ashwini, you were speaking about Hero MotoCorp earlier. The stock is now down over 3%. What would the call be?
See, this one went up a lot in the last couple of weeks. So exactly at its 200-day moving average, this news has happened. So maybe 2950, 3000, those could be the levels on Hero Moto.
Okay, what would you do with the index itself? Ashwini, as you told us in the morning, it is looking like a slightly weak day as of now. I mean, it's been choppy, so tough to say. But at any point, would you go short at all on the Nifty?
See, this is a different market. It's choppy. It goes, on both sides. Extrapolating is a big issue here. So for me, I think anything close to this 10,680, 720 zone is probably a buy zone for the week, at least on the banks. Also on the on the banks, 10,750,
26,000.
6,750, 800, that is a buy zone. Because my sense is that we don't have any of our domestic issues, and if you get trapped in short positions, you'll get into trouble. So this is a time where, if you had last week short positions, they should be covered, and probably some long positions should start getting built, because a bit of short covering and you'll get a 200-300 point bounce on the Nifty as well as Bank Nifty. I'm playing this more as a sideways where you buy support, sell resistance, etc., not as an out and out short market. Having said that, SBI is a buy with a stop of 290, target of 305. IndusInd Bank is a buy with a stop of 1560, target of 1620. And Sun Pharma is a buy with a stop of 428, target of 450.
Okay, well, Mitesh Thakkar, Prakash Kaba, both also here. Prakash, what would the stocks be on your list?
I have two stocks, both on the long side. I'll start with the Oro Pharma. That looks good. We can see an up move here in Oro Pharma. Possible target on the upside in the vicinity of 750 zones. Stop below 720. Tata Global is another stock that looks good. I think Tata Global has bottomed out from a longer term perspective. Upside is on. Any dips are buying opportunities from medium term to long term perspective. Short term target is 230. Stop below 215.
Okay. Good morning again to you, Mitesh. What are you trading at 10?
Lata, I have one buy and one sell. The sell is on Gas Authority. I discussed that in the morning as well. Keep a stop at 346.5. Look for a 330 kind of a target. And ICICI Pru is showing good strength in the last two sessions. If it starts consolidating about, sustaining about 332, buy that as well. Keep a stop at 325. Look for targets of around 346 to about 350 on the upside.
Okay. I have a couple of stocks I wanted to ask of you all. There are some stocks that are showing some weakness. Apollo Tyres is down about 3%. NCC is down 2.25%. NBCC is down about 2%. Mitesh, well, any one of them, NBCC, your thoughts?
Actually, I do like the stock. We were looking at targets of around 60 over there. So it nearly met about 58.5 and then it's come into some profit booking with the markets declining. But I think anything close to about 53, 52, I would be a buyer there, and keep a stop below 50, 60 should be your first target.
Yes, that stock has seen a lot of selling. Okay, Apollo Tyres, any thoughts, Ashwini? Yes, yeah.
That's trading below its 200-day moving average, so a lot of stocks are trading above it. So overall, it's a weak stock among tires. And today, tire stocks, because of this GST news, they are under pressure anyway. So for the day, it's probably a sell.
Okay, what about you, Prakash? Any thoughts on these stocks? I mean, there's obviously a sell-off because there's been no cut in GST for them. But X of that?
I think Apollo Tyres certainly is looking weak. It's seeing a slide to maybe around 220 zones. When I look at NCC, well, NCC also is looking weak. Looks like it can see a slide to around 80 zones. Would have a stop about 85, 50 or so and trade short. Certainly looking weak to me, NCC as well.
Okay. Actually, we have forgotten the theme of last week, which was the PSU banks. Ashwini, any of the PSU banks at all that you will buy in the dip? Bank of India, for instance, that was the one that gained a lot, right, last week?
See, State Bank is showing some action, but I think the market overall needs to turn for those smaller banks to turn around again. But I think those moves are sustainable, and Bank of India is probably trading at a 3-4 month high. So whenever this thing turns, I think PSU banks will again show you strength. That overall reducing rate, bond yield theme, etc., they'll come back. I think that is the big sustainable theme here.
Okay. So it looks, though at the moment the yield has moved up by just 1 basis point. It's not responding today, but yes, broadly fallen yield seems to be a theme.
And the market, I mean, broadly, after the big sell-off we saw on Friday, it continues today. The mid-caps are down more than 100 points right now. So not looking good at all. The advanced decline